Okay. Okay. This session basically will be conducted in two parts. The first one will be the accounting principle and procedures, and the second session will be the business planning. Okay. First, we start with accounting principle, and without wasting any more time, let's get started with some introduction. Okay. Here is my profile. Um, my name is Shivraj Swami. Uh, I'm a chartered QS by profession, and I am also a RICS assessor, RICS counselor, and a mentor. I've been doing RICS assessments since last 4 years. Um, I have done my master's in quantity surveying from University of West of England, and I currently hold number of professional membership of various organizations such as RICS, uh, Association of Chartered Institute of Arbitrator, then Canadian Institute of Quantity Surveys, then I'm a certified cost professional from American Association of Cost Engineering. Okay. I have basically over 15 years of experience, and I was involved in various high-profile projects in Qatar, Singapore, Mauritius, and India. Currently, I'm working as a senior quantity surveyor in Hamad International Airport expansion project in Qatar. Uh, okay, I think that's enough about me, and we will get going to see what's the agenda for today's session. Okay, first we'll be looking at RICS description of competency levels. Then we'll be looking at RICS level 1 requirements for accounting principles. Then we will be looking at the important topics which we will be covering in this session. The topics basically are the management and company account, profit and loss statements, cash flow statements, balance sheet, fixed and current assets, revenue and capital expenditure, and I'll be looking also at the income, credit control, insolvency and bankruptcy, taxation, auditing, ratio analysis. That's quite interesting. We'll be looking at some more detail about this one. And after this, we'll be looking at what sort of questions are usually being asked in the APC. Uh, and this will be followed by the Q&A session at the end. Okay. Okay. In the slides, basically, we'll be looking at the RICS description of competencies. I'm sure everybody is aware of what are these competency levels. However, just to refresh ourselves, I would like to give a quick insight into it. Okay. A point of caution about this one is you need to remember that each competencies has different levels, and the level which you are expected to achieve also depends on your chosen sector pathway. So we have various sector pathways, basically quantity surveying, valuation, taxation, the management consulting. So the path which you are choosing, so your competency levels basically are depend on that. Okay, so especially for quantity surveying, for today's session, which is accounting principle and business level, you are expected to demonstrate level 1 only. Okay, while for those candidates who are doing taxations or management consulting, they are required to show up to level 3. Okay, this is just for your information only. Uh, and another things to remember is it also depends on the level of membership which you are applying. So if you're applying for associate RICS, it will be different levels you are expected than MRICS, the one we just spoke. Uh, okay, okay. Let's try to understand what these levels are. Okay, in level one, basically, what the pathway says and what RICS expect the candidate to demonstrate the knowledge and understanding of that particular competency. Okay, in level two, the candidates need to provide evidence of how they have applied the knowledge which are they gained in level one. And level three, which is quite important, and this is where the candidates are regularly tested in the APC interviews. And what is expected in level three is basically the candidates has to give evidences of that they have given a reasoned advice to their clients, to their subordinates, or to their consultants, or even to their seniors. Okay, and they'll be checking the depth of your technical knowledge and how you're going to implement it. Okay, I think that's quick enough information on the first slides. Let's move to second slide, basically, which gives a description of what level one requirements in particular to the accounting principle and procedures. Okay, so as we discussed earlier, so level one basically means knowledge and understanding. Okay, so what RIC is expecting? RICS is expecting the candidate to demonstrate the knowledge, understanding of the accounting concepts, the format and preparation of management and company accounts, including profit loss statements, cash flow statements, and balance sheet. You will notice that I have underlined certain text, and these are in bold as well. So these are the important elements which usually brought in APC assessment. So I would recommend you pay a particular attention to these topics. And we'll be discussing this in the coming slides as well. Okay, let's move to the next slide. Okay, now what we'll be going to do is we're going to discuss different topics which will be covered uh, in this session. Okay, the first one is management accounts and company accounts. Okay, um, let's try to understand what is management accounts and company accounts. Basically, management and company accounts are the reports which basically states what the state of the organization. It shows what's their success, what's their failures, what's the lesson learned, and what they are forecasting. Okay, let's look into the management account in detail. Okay, so management account basically is the internal things. Okay, and this gives information to people within the organizations or a project. Okay, management accounts are basically confidential in nature, so it's not available to the general public. Okay, let's move to the company account. Okay, what is a company accounts? Okay, these company accounts are basically legal requirements in most of the countries. Okay, as per the law, each companies are bound to present their company accounts annually. Okay, and they are not confidential. It means they are open for public viewing, and normally most of these companies they publish these in the various medias, and you can access as well that one. Okay, we'll go a little bit more deeper to understand the differences. Okay, so first things, management accounts are internal. Company accounts are basically the public in nature. Management accounts are confidential. Company accounts are open to public. Okay. Apart from this, there is some other differences. Company accounts basically is required to be published annually. Okay, while management accounts, there is no fixed time frame for this one because these are internal in nature, so it's not required by law. Okay, now uh, what it includes basically the management account, they are in more details, while the company accounts, it gives just the overview of the financial state of the company. Okay, company accounts follows uh, they have a fixed format for that, while for management account there is no fixed format for this. Okay, um, this management and company account questions is basically one of the favorite of APC assessor. So I would recommend you to give a little bit more attention on this. I don't mind if you can memorize these, and that basically answers the APC assessor's questions. Okay. Okay. Next point regarding the profit and loss statements. Okay, what is profit and loss statement? Okay, the definition is fairly simple. What we are looking at is we are looking at the income and the expenditure of the project or organizations, and what it shows basically is what the profit or loss which is being made on the project or organization. Okay, it's fairly simple definitions. Okay, on the right hand side, I have shown basically a typical example for profit and loss statements, uh, which is fairly simple to understand as well. Okay, so if you look at the top portion, which has a different sort of incomes, there is incomes coming from sales, services, and other incomes, and there is a total made, which is around 177 $1,000, and just below that we'll see there are some expenses, various expenses listed down, which basically amounting to $140,000. Okay, at the bottom you will see a profit or loss. So if you look at the figure, which is a positive figure, which shows 37,000 thousand profit. So what it indicates is this company is making enough profit and it is a profitable venture. Okay, I think it's quite fairly simple, and I believe you guys have got this one. Okay, let's move to the next slide. Okay, cash flow statements. I'm sure this one everybody is aware because it's these topics and this task we do it in our everyday QS professional life. I'll be looking at basically is just the basic things on this one. Okay, what is a cash flow statement? Okay, it is basically concerned with what is the flow of cash and out after the business or project. Okay, it is basically used as analytical tool to understand how how the company is performing, and is helpful in determining the short-term viability of company or project, particularly its ability to pay the bills. Okay, in the next slides, I given a typical example, which we'll look at it. Okay, just apologize for the resolution of this slide. I hope you can see it clearly. Okay, if you look at it for the month of Jan and for the month of, sorry, November, you will see the figures are negative. Okay, what it indicates basically is there is a deficit, that the company is short of funds. Okay, so in this situation, basically what most of the companies do is they try to negotiate the payment terms with their clients. Uh, then they try to cut their expenses. Then they try to process their change order expeditiously and seek additional funding via advance payment. Um, uh, Basically, this sort of questions will not be asked. I'm just telling you just for the information, because this particular sheet is only for level 1, and the cash flow statement basically are more covered in project finance competency, which is level 3. Okay. Just a minute. Not sure why it's not moving. Sorry. Okay. Next important topics which we'll be looking at the balance sheet. Okay. So what is a balance sheet? It's basically summarizes company's assets and its liabilities at a specific point in a time. It gives an idea of what company owns and what company owes. Basically, in balance sheet, you will see there are basically 3 different components. If you see, there is a typical example I have given. You will see on the top there are some assets. Basically, they are divided as fixed assets and current assets. We'll look about these fixed asset and current asset in the next slides, but just for your information, the total assets are basically 96,000, and you will see there are liabilities given, and which equates to 53,200. So at the bottom you will see a balance sheet shows a 96,000 surplus, so which is basically a very good sign. Okay. 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 Let's look at the fixed assets and current assets. Okay, this is also one of the important questions, and very often this is being asked. And there are some cases where the candidates has been referred because they were not able to answer these questions. So I would recommend to give a little bit more attention for this one. Okay, so what is a fixed asset? Okay, fixed assets basically tend to the assets that are available at all times. Okay, fixed assets are also called as a tangible assets. Tangible assets means they are physical in nature, where you can physically feel those assets. And the examples of those assets are basically your office building, the plants, equipments, the vehicles, your computers, your furnitures, or all these things are basically comes under fixed asset. Okay, let's see what is current assets. Okay, fairly simple. Current assets means the cash in the bank and the income, the other source of income. Okay, uh, these assets are readily available. Okay, and required for day-to-day operation of the project. Okay, while the fixed assets, they are there, but they are not readily available. So in the situation where there is urgent need of um, cash or funding, you have to rely on the current assets. Okay, I think it's fairly simple and easy to understand. Okay, let's move to the next important topic, which is about revenue and capital expenditures. Okay, what is revenue expenditure? Okay, revenue expenditure is basically your regular day-to-day operation needs. Okay, this is the uh, money basically you are spending for your daily or your routine business needs. And the examples for these are basically the salaries, the insurance monies, the rent you're paying, the advertisement you're paying, even the payments for your subcontractors or suppliers. All these basically comes under the revenue expenditure. Okay. Uh, what the next one is capital expenditure. Okay, capital expenditure, basically they are one-time expenditure, or sometimes they are required. And what is it? It's basically an outlay of cash, either to acquire long-term assets such as plant, machinery, furniture, vehicle, land, etc., or to improve an existing opposite assets. Okay, fairly simple, quite easy to understand. Okay, let's move to the next slide. Uh, Credit control. Okay, what is credit control? Okay, so basically, credit control is the business strategy mostly employed by the financial institutes. And what they do is basically they offer the credits, and they control it and they manage it. Okay, so how it works basically is, let's take an example of the credit cards. Okay, basically most of the financial institutes, they give credit cards, and basically they are on the open terms. uh, and what's their purpose is to get more customers. Okay, and how, once you have more customers, how they want to control it. Okay, basically that is control based on the amount of based on your income. Okay, so this is how they are controlling the credit. Okay, so basically what happens is every customers are given a credit limit, and that is depends on their incomes. Okay. Okay, next important term is insolvency and bankruptcy. Okay, this is also quite familiar term, especially in our field, and these days we are hearing these terms quite often. Okay, what is insolvency? Basically, this is the financial state in which a person or company's debts exceeds their assets. And once it exceeds, basically they are unable to pay their debts as they fall due. Okay, and what is a bankruptcy? Bankruptcy basically is a legal declared process. Okay, and what happens in that is, uh, those organizations, when they become bankrupt, the financial institutes starts the liquidation process, uh, so that they can recover their debts from the organization. Okay, basically the insolvency normally doesn't mean it's bankrupt. However, those bankrupt organizations basically are insolvent. So just a small difference which we need to uh, understand on that. Okay. Okay, taxation. Okay, what is taxation? Is basically it's a levy that the government uh, uses on to charge on the individuals. Okay, the taxations basically are divided in two types. One is a direct tax, which is basically the income tax, and the other type is basically the indirect tax, which is sales tax, the employment tax, etc. Okay, what the government do with this, basically these are the source of revenues for the government, and with this source of income they basically put the money in developing the infrastructure of that particular country. They built roads, uh, hospitals, and all sort of infrastructure. Okay. uh, Auditing. Okay, I'm sure everybody is aware about auditing. Okay, what is auditing? Okay, auditing is basically the official examination of organizations' accounts to ensure that the money which is being spent is fairly accurate, and that is spent for the reason what is stated in the financial accounts. Okay, okay, basically there are different types of audits. Sorry, one is a financial audit, tax audit, cost audit, the management audit, and etc. Okay, okay. We will be looking at ratio analysis. Okay, what is a ratio analysis? Okay, ratio analysis is basically a tool which is used to analyze the performance of the company. So how that company is basically performing, and how it's been done is basically it's done by using the published accounts such as the income statements, the balance sheet, cash flow statements, etc., etc. Okay, and what it helps, basically it helps the owner to spot the trends in the businesses, and which can be compared with the performance and the conditions with the average performance of similar businesses. Okay, so they will basically see the trends, how the other competitor company is doing, what are their plus points, what are negative points, what things we need to improve. So these sort of things they will look into that one. Okay, also this ratio analysis basically is early warning indications, which will tell you if your business has a problem. Okay, how we do ratio analysis. So basically there are different formulas are there, so which we'll be looking at, uh, looking at in the next slide. Okay. Okay, first one, which is gearing ratio. So what gearing ratio does is basically it compares um, shareholders' funds to the long-term liability. So long-term liability basically are the debts. So that can be the bank loans, the mortgages, etc., etc. And shareholders funds are basically the owner's capitals. Okay, so what the owner is investing it. So Also, this gearing ratio is also called as debt to equity ratio. Okay, so what it indicates. So gearing ratio, the higher gearing ratio means it's a higher risk. It means the owners liabilities are more than what the capital they have put in the business. So, and which is basically a not good sign. So what is advisable is to have the gearing ratio less than 1. Okay, just a point to remember. Okay, the next one we'll be looking at the current ratio and quick ratio. Before that, I would like to give there's something missed out to put it in the slides, but anyway, I'll just try to explain you. Current ratio and quick ratio are basically the liquidity ratios. Okay, and uh, these are the two ways they are calculated. So what is a liquidity ratio? It's basically measures the ability of company to pay its short-term financial liabilities or obligations as they become due. Okay, so first we'll look at the current ratio. It's fairly simple formula. It shows total current assets divided by total current liability. Okay, sorry, I just need just a minute. I'm just checking some charts. Uh, okay, I'll go into that one. Oh, that ratings. I'll try to remove that red things maybe in the next slide, just not to disturb the flow. Okay, just bear with me for a few minutes. We'll once we finish, we'll try to look into that one. Okay, current ratio. Okay, what is a current ratio? Is basically the total current assets divided by total current liabilities. Okay, so what we are looking at is the current ratio. Uh, if it exceeds, if it's greater than 1, means your assets are basically exceeding your liability, which is basically a good sign. Okay, and if your current ratio is less than 1, which indicates that your liability is exceeding your current asset, and which is basically not a good sign for the business. So there is something that the organization to look at it. Okay, next one is a quick ratio. Okay, this is also another liquidity ratio. Okay, so what exactly is quick ratio? Okay, quick ratio basically is liquid assets of the company divided by total current liabilities. Okay, so again, you need to look at it. How is your current ratio? Same as how is your quick ratio? So same as current ratio, your quick ratio need to be greater than 1. Okay, uh, that's it about the quick ratio. Let's look at it, the profitability ratio. Okay, profitability ratio basically measures the profitability of an organization. Okay, and it indicates how well a firm is performing in terms of its ability to generate revenue. Okay, these formulas basically they are not ask in the APC, okay, because you're not supposed to do any calculations or anything. This is just for your information, and just read through during your APC uh, for your information. Yeah. Okay. Next slides, which is I can say quite important for all the APC aspirants. That I did some research on this one, and I come up with some few questions which are mostly asked in the APC interview. Okay, basically we have uh, gone through the whole session. Okay, and I believe most of you are having the basic knowledge and understanding of what are these terms. So in this particularly sessions, I'll be uh, asking some questions to get your understanding of this one, and I'll be giving you the possible answers as well. Okay. Okay. Why is the knowledge of accounting important for a QS or chartered surveyor? Uh, this is the questions to you guys, if anybody can answer. Okay. Okay, there are some answers coming up. To understand the financial performance of project, very good. To understand the current state of our business, correct? Yeah. Okay, to know the company's health, yeah, that's correct. This will help us to understand the business correctly, that's accurate. Yeah, okay. I can see that most of you guys are well aware about it. So I'm giving you the possible answer. Okay, there's one more coming from Shahbaz, because quantity surveys deal with the cost to understand the financial performance, to understand the project status. Okay, all are right to the point. Okay. Sorry, we've been here. Okay, so these are the possible answers. Okay, uh, so with the fine accounting principles, uh, you'll be able to understand, assess, evaluate the financial stability of the firm, so that we can manage it effectively. Also, to be able to understand the financial health of the projects, so that you can protect the client interests, and importantly, to understand your own financial health. Okay, clear enough? I think, yeah. Okay, next, what is the difference between management account and company account? Okay, guys, we discussed this one earlier, and which is one of the most important questions in the APC, and I'm expecting some answers from you guys. Okay, management account is confidential, company account is open in nature, correct? Is internal. Okay, okay. There is one comment I'm just seeing. I just need to look at it, which looks okay. Uh, no full. Actually, company accounts are public, while the management account is internal. Okay, that's the other way around you wrote. Yeah. Okay. In the next one, you already done that. Okay, company accounts internal are available to management account, public. Okay, I think you all are to the point. Let me disclose the possible answer for this. Uh, just a minute. I'll try to do it this in the next session. Okay, uh, because if we try to touch somewhere and things might go wrong, so just bear with me for another few minutes, please. Thank you. Okay, management accounts provide information to people within an organizations, and they are confidential in nature. The company accounts, they are legal requirements in most countries and provide information to people outside the company. They are open for general public viewing. Okay. Okay, profit and loss statements. Straightforward answer. A statement that shows income and expenditure for a project or company to show what the profit or loss is being made. Okay, straightforward answer. Okay, we continue. Okay, question 4. What is a difference between employees' cash flow and contractors' cash flow? I'm expecting the answer from you guys. If anyone can give some insight on this, the screen share. Okay, just a minute. Just a minute, because the guys are not able to see it. Ilavarsan Venkateshwaran, can you please check if you can see the screen now? Just raise your hand so I know. Okay, there are some answers coming up, which means everybody can see it. Okay, that's great. Okay, employees' cash flow indicate his outflow mainly toward the project, vice versa for the contractor. Okay, that's okay. Employees' cash flow is prepared while budgeting for a project's cash flow to show how revenue is generated for the project. Okay, your description is distortion in voice. Okay, is it clear? Okay, that's fine. Okay, what the question is basically asking is the difference only. Okay, what you guys are giving, the answers are okay, but it doesn't answer the questions. We only asking what's the difference. So there is a contractor's cash flow and there is employer's cash flow, and what you need to basically illustrate is just the differences in that. Okay, no problem. We will look into the possible answers. Okay. Okay, when compared to the contractor's cash flow, a client cash flow basically considers other things, just like the fees to the government authorities, consultant fees, uh, the land acquisition charges, marketing, sales charges, advertisement, etc., etc. So everything is same. Just these are the additional things which are there in employees' cash flow. Okay. Okay, the Shah Abbas has written, let me read it. Employer's cash flow is to oversee the cash requirements for the project, the contracted class B. Okay, we are basically looking at just the difference. Yeah. Okay, you can use this answer if this kind of questions comes in the APC. That will basically satisfy the employers, sorry, the APC assessors requirements. Okay, next questions. What is a balance sheet? Straightforward answer. It is a financial statement that summarizes company's assets and the liability at a specific point in time. This gives an idea as to what company owes and owns. Yeah, that's correct also, Ranjit. Okay, what is meant by credit control? We have basically discussed this one earlier. Uh, anyone? I just wanted to understand to set the limits for customer. Yeah, correct. Yeah, depending on their income. Correct. Yeah. Yeah, actually, this is kind of the answer the assessors are looking, because you just have to keep in mind that this is just the level 1 competency. Okay, they are not going to dig you more on that, so just fairly simple answers. That's good enough. Okay, controlling the credit, possible measures to avoid problems in cash flow. Correct. Giving more time for good pairs or less for bad pairs. Okay, great. That's all are correct answers. I'll just give you my answer. Okay, it is a financial strategy introduced by the business to offer, manage the credit. Okay, you can also write a little bit about how it's been controlled. Okay. Okay, that's one of the favorite questions for assessors. Okay, what is the difference between fixed assets and current assets? Yes, anyone? A quick answer, please. Okay, fixed assets is tangible assets, current assets are cash quickly, correct? Fixed assets are physical nature, current assets cash liquid, correct? Long-term assets, current are usable day to day. All are correct and they are perfect. I'll just give you the answer here. Okay, fixed assets are long-term invested. Current assets are currently, yeah, that's correct. Elaboration Venkatesan, thank you. Okay, fixed assets tend to be the assets that are available at all times. Includes company's office, building, plants, office equipments like computers, vehicles, and all these things. Current asset means cash in the bank. Okay, let's move to question number 8. Okay. Okay, question number 8. Okay, if you discover your company's current ratio is too low, what actions would you take to correct it? Okay, anyone? Anyone? Okay, reduce the liability. Yes, that's correct. Reduce debts. Yeah, that's correct. We increase current assets and minimize liability. That's correct as well. Okay, reducing the liability is yeah, that's correct, guys. Yeah, that's correct. This is what I was looking at. Yeah, You can add on that. Yeah, I'll just give you the possible answer for this. Okay, pay some debts. Yeah, increasing your current assets from loans or other borrowing, converting non-current assets into current assets, increasing your current assets from new equity contribution. Through credit control process, yes, yeah, that's also, we can add it on this. Okay, let's move to question number 9. Okay, what is the role of auditors? Okay, guys, I'm looking for some answer from you guys. Okay, verify the accuracy of company accounts, correct? To find out if company expenditure is in right path, yes, that's correct. To check financial health of company, produce annual reports, feedback any corrective measures, to verify the expenditure made by the company, to review. Okay, all those answers are correct. Okay, but one thing is missing. Okay, he will do verify all those expenditures, all those uh, records and all these things. One thing is missing is he need to give the report. Okay, because without audited reports, the whole the exercise will not be fruitful. So just keep in mind, right, when it's been asked, just at the end, you need to give a report. Okay. Okay, report back to the management. Yes, yes, yeah, that's correct answer. Okay, auditor is the independent bodies tasked to perform fair assessment, found out any violation against the law. Yeah, 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 that's correct also. Okay, I'll just read out the answer. The auditor is an independent bodies tasked to perform fair assessment of companies' financial statements, issue an audit report based on the results of the audit. Okay, fairly simple answers. Yeah. Okay, let's move to the last question. Okay, what is acid test in accounting? Anyone? Acid test in accounting. Quick ratio, that's the correct answer. That's the correct answer. There's the liquidity of the company. Yeah, that's the correct answer. Yeah, basically quick ratio is also called as acid tests, and it is one of the best measures to measure the liquidity. Okay. Okay, guys. Uh, we done with the possible questions, and now I'm welcoming you for the questions. You can type in the questions you like to ask. Any questions, guys? Okay, basically we are almost 1 hour into the sessions. What I would do is basically we'll move to the next session, and if you guys have any questions, please feel free to write to us on MEQSA email address. Okay, and then we will try to answer you on this. Okay. I hope this session is useful. I try to keep it simple, fairly simple, and I try to concentrate mostly on the possible questions which are being asked. Okay. Okay, these questions coming from Femi. Okay, I just discuss about this one. Uh, you'll be not you basically what's the requirements for this competency is they just require the candidate to demonstrate the knowledge and understanding. So whatever we have discussed just now, that covers the most of the knowledge which you are supposed to having it. I fairly doubt that there is something which will come uh, outside from what we have just discussed. Okay, uh, keep in mind that this is level one, and in the APC, normally the assessors will have just they will ask you only one or two questions. The second questions, if the candidate is not able to answer the first questions, then and then only they will go for the second questions. Okay, and that's it. Yeah. I hope I answers Femi's question on this. Okay, financial control also is there in level. Yeah, yeah. That's correct. Okay, so uh, for the level one competencies, just the basic knowledge, okay, and your basic understanding of this competency. Okay, so in the financial control, they will drill you more on the depth of your technical knowledge of the financial controls. Okay, so for for this competency concern, it's fairly simple, level one. Okay, let's not complicate our lives. Keep it simple and keep in mind this is just the level one. Okay. Any more questions? Okay, how the construction counting differ from the okay, there is a question from Ilawas and Venkatesh. Okay, okay, what you asking is basically how you deal with your project's accounting. Okay, to do that, we have different majors which are different from the accounting principle. Okay, the normal accounting. So for construction project, we have cost reports, which will give the overall project's status. Okay, and these things are basically comes in picture is when you're doing a pre-qualification of your tenderers, or if you're doing a pre-qualification for your subcontractors. So in that things, basically, we will be looking at their financial statements for 3 years, and there you will see how that company is performing. Okay, so that's one part. And for the projects, we have a cost report. That's a different things. Okay, is there any specific standards required as per Qatar bodies which needs to be there to in construction? I don't think there are any specific standards uh, because okay, let's be frank, we are not basically a chartered accountant, so so let's get not get into that one. Okay, because the specific requirements and all these basically roles are basically managed by the professional chartered accountants, and this doesn't comes to us. Yeah. Okay, guys. I think we are well into the 1 hour, and I think we will just move to the next session. Okay. Thank you. We'll be just closing these slides, and we will go to the next slide. Okay, business planning. Okay. Okay, welcome to the second session, which is on business planning. Okay, let's move to the agenda. Okay, as usual, we'll be looking at the RICS description of competencies. Okay, and we'll be looking at what is expected in level 1 and what is the description, basically as per the RICS ABC pathway guide August 2018 version. Yeah. Okay, then we will be looking at the important topics which we'll be covering in this. Okay, we'll be looking at why business plan is required. We'll be looking at what is a business plan. Then we'll be looking at the whole sort of different types of business plans. Then we'll be looking at the key components of a business plan. We will look at it, what is optional appraisal. We'll go in details about SWOT and PESTEL analysis. And we will look into sensitive analysis briefly. And interesting, the potential questions asked in the ABC. And our last sessions will be the question and discussion session. Okay, I will just keep these slides because we have already discussed. Just a minute, I'll try to remove this this annoying thing. Oh, not sure how. Let's see if I can put this one here. Please continue. It's fine. Okay. Okay. It just means, sorry, I'm just a bit little new on Zoom because this is the first time I'm using it. So there's something. Okay, no worry. We'll just move on this. Okay, sorry. This one we already seen. That one. Let's move. Yep. Okay. Okay. I'll just keep these slides because we have already discussed this one. Okay. Okay. As per the RICS Pathway and Competency Guide, August 28 versions. What is expected in level 1 for business planning is the candidates, basically they need to demonstrate the knowledge and understanding of how business planning activities that contribute to the achievement of corporate objective. I do understand that this description is not that clear. Okay, so sometimes what you need to look at this is, and what I advise is, you need to just look underneath the pathway guide where we have a level 1 description, and below underneath they will give you some sort of examples of knowledge that are covered in this level, or the kind of activities basically that are related to the level 1. Okay, so um, so what is basically we are be looking at here is the types of business plan. Okay, we will be looking at the variety of business plans in the context of Qatar and in general context. Basically, there are a whole range of it. A few examples is basically the strategics, departmental, operational, or corporate. Okay, then we will be looking at the essential elements or component of business plan. Yes, we will be looking at it and we'll try to understand what exactly is that. Okay, then we will look at it, look at the organization structure, fairly simple. Then we're looking at the financial benchmarking, meaning of working capital, stocks, debtors, creditors, accounting principle, accounting techniques, forecasting techniques, planning to meet corporate objective. Okay, if you look at these examples, you will see there are some activities basically are cross-referencing. Okay, so basically if you look at it, this the financial benchmarking, the working capitals, the accounting techniques and accounting principles, basically these are also comes under the accounting principle competency. So this is where the cross-referencing is there. Okay. Okay, let's look at it, why the business plans are basically required. Okay, basically business plans are the legislative requirements in most of the countries. I would like to give some examples. Say if you are setting up a business and you are seeking bank loans to roll your business. So you go to the financial institutions to seek the funds. So in that cases, the financial institutions, first things they will ask you is, where is the business plan? Okay, without having a business plans, they are a very less, or I can say there is no chance that you are going to get any bank loan. Or say if you're looking, if you already set up your business and if you're looking for investors to invest in your organizations, so in that cases also basically the investors are like to have a outline of your business plan so that they know where the capital is being invested. Okay, fairly simple. Okay, and also it's a good thing to have the business plan. Okay, say if you are new, if you are starting a new business, yes, you need to have business plan, which is basically the startup business plan. Okay, if you already set up your business and now you want to venture into international market, so that time also you need to have a business plans. And also you need to have a business plans to develop your businesses. Okay, so that can be like internal business plans. Okay, we will go in a little bit more details when we look at it, what are the different types of business plans, and we will go into that one. Okay, let's quickly so this is the legislative requirements and required for bank loan to seek funding from investors. Okay, what is a business plan? Okay, uh, so business plan basically clarifies your business area. Okay, uh, your what sort of products or services your business is going to introduce in the market. So that basically clarifies what you are basically putting it in the market. Okay, uh, business plan basically also spots the potential problems, and to spot these potential problem, basically we have a technique which is optional appraisal techniques uh, called SWOT and PESTEL analysis. We'll be going in a little bit more details about this one in the coming slide. It sets out your goals, okay, and it measures your progress, or I can say it measures your performance. And how we do that is basically it's connected to your accounting or financial progress, or uh, also you're getting the feedback from your client, and all these things are basically covered in that. Okay, okay, let's look at it. What are the different types of business plans? Okay, we first look at what sort of business plans are basically used in locally, basically in Qatar, and then we will look at it in the general context. Okay, in Qatar, basically there are two types of business plans are used. One is for capital raising business plans. This is basically purely for seeking the funds or raising the capital for their businesses. Okay, and the second type is basically the management or managerial business plans, and these are used for strategic planning. We will get into the strategic business plan in the next slides. Okay, so this is just for your information. Now we look at it in the general context. Okay, so the first type is a startup business plans. Okay, as the name suggests, basically these are used uh, for new businesses which are trying to uh, I got introduced in the market. And what this business plan basically does is it gives you a step-by-step guides on how you're going to open start a new business. Okay, and what sort of things are basically included in the startup business plans is it has the details of your company, it has the details of what kind of services you're going to provide, it has the details of your market evaluations, and it has the details of your financial analysis. So the financial analysis, the one I just spoke earlier, that this has a cross-referencing to the accounting principle. And we have already discussed these things in earlier session: income, profit, cash flow projections, and all these sort of things. Okay, let's look at the second type, which is internal business plan. Okay, as the name suggests, this basically the internal business plans. Okay, so the target audience for this kind of business plans is internal in nature. Okay, and what happens is those organizations say if they want to start a new project, or so what they will do is basically they will write up a plan and propose it to the board, and how they going to implement that project, and what sort of fundings they requires. Okay, also they will be giving information such as in what state the company is, whether it is having a good success or it's having some problems, and all these things are basically included in internal business plan. Okay, they also look at the project cost and hiring. Okay, what this project cost and hiring things. Okay, I'll give more detail on hiring. Is basically uh, say the business wants to start uh, say a new division, say overseas they want to start a new division. So what they will say do is they will look at their resources, if they have enough resources to uh, run that business. Okay, and if there is a need, then they have to go for hiring. So all these sort of details basically are covered in internal business plan. Okay, and one things which you need to remember is internal business plan usually done to launch new products, okay, or services, or looking at the new opportunity in the market. So fairly simple. This is internal in nature. Use when the company or the organization is going to launch new product or new services, or they are looking at the new opportunities in the local market or overseas market. Okay. Okay. The third type is a strategic business plan. So what is strategic business plan? Okay, it basically looks at how company aims to achieve their strategic goals. Okay, so it basically look at it as a whole business or just the segment of it. Okay, also in the strategic business plans, they are basically looking at the bigger picture. Okay, so they are not only considering the internal, but they are looking at the whole things, which includes their finances, their resources, etc., etc. Okay, also they have a plan, means how to handle the unforeseen conditions. Okay, so let's take an example of the current COVID-19 situations, which are basically everybody is getting suffered. So in this current situation, you're seeing that um, the companies are taking a lot of steps to preserve their interest, and they're trying to stay in the business, and how they're going to stay and what things are required, that basically are included in their strategic business plan. Okay, also say if in the past we used to have recession. Okay, so what we notice is during the recession is, when the recessions comes, you will see the government stops the funding. Okay, then there are very few projects in the market. Suddenly we'll see the tower cranes are disappearing from the scene. Then you will see suddenly a lot of companies are basically cutting down their staffs, all. And why they do it? Basically they are trying to find way to to stay in the business. And how they do it is basically they use the strategic business plan. Okay. Okay, the next type is departmental business plans. Okay, As the name suggests, in departmental business plans is basically it's a planning document which is basically focus on the department, which is a specific department within the company. Okay, it's basically a very fairly simple things. Okay, so this focuses on specific department within a company. Okay, um, in this current COVID-19 situations, basically, if you see a lot of businesses are getting closed down and they are trying to means focus those big groups. What they do is they try to divert their focus to certain department. Say if there is a big group which has a lot of divisions or a lot of departments like infrastructure or F&B sections or hospitality industry sections and all this thing. So based on the needs, they will try to focus on that particular department and see what things are required to make that business sustainable and successful. Okay. uh, Next type is operational business plan. Okay, again, this is a bit internal. Okay, uh, and it's consisted of the elements related to company's operations, and what it focuses is basically their day-to-day operations. Okay, so what they will do is they'll keep a special focus on their day-to-day operations over a period of time, say like 6 months or 1 year, and after that period they will see if whatever the operational targets they have set in the plan they are met or not. So fairly simple. Yeah. Okay. Okay, a typical business plan. Okay, so what things basically are included in a typical business plan? Okay, there are basically whole loads of things are there in the business plan, but if in the APC, if the assessor asks you what are basically the typical business plans, what elements are there, so just these few things, if you say, I think that will give the required answer for the assessors. Okay. Okay, so what things are there in the business plan? Okay, we will have a business information. So there will be some information, means who is the owners, who is the stakeholders, where the contacts, where their business location. Okay, then it will have information on the staff. It will have information on the organization structure. So what they will look is means they will look at it means what sort of staff basically they require, or they really need to hire new staff, or the current staff is okay. Okay, and then we'll have a business overview, or I can say vision. Okay, so what is basically the business vision? So this is basically what's your USP. USP is universal selling point. So what kind of product or services which you are going to offer, okay, and what you want to achieve. So these sort of details are basically are included in the business overview or vision. Okay, next one, your aims or mission statement. So what is basically the mission statement? Okay, mission statements basically give a brief description of company's fundamentals. Okay, so what it tells me is why this particular company exists. Okay, and what they want to achieve in the future. Okay, I would recommend uh, you to basically look at it, your company's what are the visions and what are the mission statements, just for your information and to have a better understanding. Sometimes the assessors do ask what's your company's mission statement and vision. So just have a look at it. I'll give a little bit example of this, what things are included in the mission statement. Okay. Examples like, okay, we'll going to give excellent customer service. We are going to build long-term business relations. Okay, we are going to give back to the society. We are going to do the things right. uh, these sort of things basically are included in the mission statement. Okay. Financial summary, straightforward. Market research. Market research basically, these are the things you will look at it is means you are basically keeping eye on your competitors. uh, Means what your competitors are doing, what market they are focusing. So these kind of resources are very much essential for the businesses. Okay. And next point is optional appraisal. Okay. It's basically done by doing SWOT and PESTEL analysis. We'll go in more detail in the coming slides. Operations and logistic. Okay, so what basically is operations and logistic is means how you are going to deliver your services. Okay. Means how is your supply chain, and how is your basically the staff will be working, whether they will be on site or they will be working remotely, and how your whole the logistic operations and all this going to be done. Okay, so these sort of details are in the operations and logistic. And the last one, financial budgets and forecasts, which we have already discussed earlier. Okay. Uh, in this financial and budgets, basically what they will do is they will see means if they require any additional funding for starting a new businesses, or or what sort of others ways of fundings are required, means whether they can go for bank loans or they can go for mortgages, this sort of things. Okay. Okay. SWOT analysis. Okay. Basically, before we go to SWOT analysis, I would like to give a little bit what is SWOT and PEST analysis, and why is required. Okay. Basically, these are the optional appraisals. Okay, and in optional appraisals, we have a SWOT analysis and the PEST analysis. So, what optional appraisals are basically? So, the optional appraisal basically gives the information uh, uh, so that the businesses can make informed decisions, and they apply a sensitive analysis, and they basically decides whether to embark on the new venture or to change their strategies. Okay. Okay, we will see a SWOT analysis, what it is. Okay, fairly simple. I believe most of you guys are well aware of SWOT analysis. Okay, what SWOT stands for? S for strength, W for weaknesses, O for opportunities, and T for threats. So what is your business strength? Okay, so basically, what's your USP? What's your selling point? So that can be your highly professional staff or your business locations. Okay. Your weaknesses. So what your weaknesses can be: the current market conditions. Okay, then you may have a high staff turnover or weak market shares. Okay, O for opportunities. So these are the areas of growth. Okay, so for example, is you will be looking at the overseas business opportunities. And T for the threat. The threat can be like your competitors moving to your business locations or change in legislation, etc., etc. So if we look at it, this one, you will see strength and weaknesses. Basically, these are the internal elements, okay, of your businesses, okay, which we can control. While the opportunity and trade, these are the external elements, okay. Okay, we are done with SWOT, and now we will go to the PESTEL analysis. Okay, what is PESTEL analysis? Okay, what PESTEL stands for: P for political, E for economic, S for social, T for technical, L for legal, and E for environment. Okay, we'll look into what exactly is political means. Okay, normally uh, when the businesses are working, certain governments give incentives. Okay, I can say like if you take an example of India, look at it like the way Gujarat and Andhra Pradesh, they give a special incentives for the businesses. And if the government changes, so that change might have a severe impact on the businesses. So that can be also your tax regulations. These regulations may change based on the current political situations. Okay, fairly simple. Okay, E for economic. Okay, economic means this is basically your pricing strategy for national and international. So what includes in the economics is the currency. So most of the times you have currency fluctuations, also the GDP, the gross domestic product, and also the nature of the public spending. So all these factors are necessary to be taken into considerations when you are doing your optional appraisal for or making your the informed decisions for your businesses. Okay, so S for social. Okay, so what exactly means social? This is basically the change in style, change in your choices, or the population demographics. It means like the certain ethnic groups are, say, if before when you start your business, that certain ethnic group was there, and once you start, they might move. So these sort of things you need to take into considerations when you're going making informed decisions on for your businesses. Also the age of that social group. Okay, there is no point introducing say technical more advanced technology products if the most of the population is aging. So these sort of things means you need to look at it when you are doing the analysis. Okay, uh, uh, thanks. T for technical. So this basically range from the CPD, IT, transport, and type of project. Okay, I'll just give try to explain what this means. Basically, uh, the way the technology is progressing these days means this things are changing with a great speed. So you need to consider uh, when you're how you call analyzing your business decisions, that whether you can cope with these changes and how you're going to go about it. Also, the type of projects means certain contracts, okay, like if you use a FEDIC, you'll have a different implications, or you go for NEC or GEC. So these kind of things you need to take into considerations when you're looking at these. Okay. L for legal. Legal, basically this looks at the laws, uh, laws. Then what are the legal implications, such as health and safety, insurance, bribery act, and other legal arrangement. So usually we'll have laws regarding the wages and the employment. So if these laws get changed, you have severe implications on your business. Okay, say earlier the rate for the say a skilled labor was certain X amount. With these new changes, the price of the skilled labor goes up. So these sort of things you still need to take into considerations. Okay, then E for environmental. Okay, basically these days a lot of government organizations are asking for companies to comply uh, with the environmental laws. Uh, and this is basically a quite hot topic these days. And what you as a company you need to show is what uh, how is your carbon footprint, how is your printing of paper and all these. Just a minute. Okay, sorry, again this particular thing is a bit annoying. Okay, so we look at it, the environmental things means how is your carbon emissions, how the environmental factors are considered. Okay, so that basically is the pest analysis. In your APC, they are not going to give you, not going to ask you to describe each of these. They will just ask you, okay, what is PESTEL? Just give a brief about this one. Okay. Okay. Okay, optional appraisal, I think we already covered earlier. Now we will see there is a new terms which is how to apply the sensitive analysis to those decisions. Okay, what is a sensitive analysis? Okay, what basically we do in sensitive analysis is means we monitor different scenarios and we change the variables, and this is basically based on the and assess the impact. Okay, and this is basically used for development appraisal project. So say you are developing a mixed use project, which you have different components like leisure, residentials or commercials. So in that stage, what we will do is means we will change those proportions of those components like residentials, commercial. So we'll say 10% residential in one case, and we'll see what kind of revenue that will generate and in second case, we'll say, okay, we might change this percentage to a lower and increase the commercial uh, how you call areas more, so that we have more rent or yield. So these sort of things basically look into the sensitive analysis, just just to make informed decisions, because this will affect the whole life cycle cost and your revenue and residual value. Okay, and we will give of overall comparison of all these options. Okay. Okay, now basically we are looking at the potential questions that are asked in the APC. Okay, now I'll be passing these questions to you guys, and I'll expect some answers from you. Okay, what are a typical business plans, lifespan of business plans? Anyone? Anyone have any idea about this one? Okay, there is something coming up. Okay, that's correct. 3 to 5 years, 5 years, 5 years. Yes, correct. Okay, you guys are there. I'll just give you my answer. Okay, basically there are three different lifespans. One is short, which is basically uh, from 6 months to 1 years, and what 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 it shows is what you want to basically achieve in that business plan. Okay, so it will say growth opportunities or new services. Okay, and then we'll have a medium business plan, which usually lasts for 2 to 5 years, and there is 5 to 10 years lifespan business plan. Interestingly, these days, most of the companies are not uh, developing a business plan for long term, because currently the way the whole market is behaving, because there are so many factors are there. So these days, many companies are not basically having a long term business plan. So what they will basically do is they will keep an eye on the latest developments, and uh, what is basically advisable is to start small and then grow bigger. Uh, so that in that way you are safe, and if you start bigger, there are chances that your business might fail. Okay. Okay, next question. Okay, this is it's basically one of my favorite as well. Um, so if you are my candidates in the APC, this is the questions I might ask you. Okay, what are the objectives or goals of your organizations? For answer, I would recommend you guys to think about your own company and try to give me some key objectives of what your company might wants to achieve. Over to you guys, please. Okay, so what you wants to achieve by setting up your company? Okay, in other words, What are your objectives? Okay, timely completion of projects, great, yes. To be international developer with iconic and important building, yes, correct. To reach 90% at the employee satisfaction with maintaining our integrity, that's correct. Quality, yes, correct. Any more, guys? You are missing most important. Yes, HSC, yes, that's one of this. Okay, why basically you set up a company? What's your goal? First, client satisfaction. Yes, that's correct as well. What's your goal? Cost effective. Yes. Yes, that's the one I was looking for, Ranjit. Yeah, that's correct. You are looking to have more profit. Okay. Yeah, to achieve profit. Correct. Sustainable growth. Yeah, that's correct as well, Sanjeev. Okay, I think you guys has given me fair answer. I will just give you the my answer. Okay. So first one, more profit. Yeah, that should be the first one. Any businesses, okay. More profit. They want to have more clients. Okay, you want to have more tender wins. Yeah, you want to earn higher fees. Yeah, you want to retain your clients. You want to have your performance measurements so that you have a better customer satisfaction. Okay, you just a minute, there's something gone wrong. Okay, less operating cost. Then you need to have your contingency for plans for survival in case of there is a recession or there is some unforeseen conditions. Okay, you want to have a better ethics in your company than your corporate social responsibilities. Okay, so that's the fairly good points which you can cover to answer this question. Okay, let's move to question number 3. Okay, what would you expect to find in sales and marketing plans? Okay, anyone? Okay, growth of company, that's correct. To expand business, yeah. Attracting more clients, yeah. Yeah, any more? Okay, we are looking at the sales and marketing planner. So sales is the word, yeah. Strategy to get more customers. Yeah, that's correct as well. Yeah. Okay, position in the market in terms of contribution. Yes, customer care affects sales. Yeah, that's correct. That's true. Okay, I'll give you my answer, highlighting on our strength. Mm, yeah, somehow. Okay, I'll give you my possible answer on this. Okay, sales projections. This is what you will see in your sales plan. Then you will see your competitors analysis, promotions. Okay, your market analysis. Okay, you will see a price free analysis. And then you will see new market studies and customer feedback analysis. Okay, fairly simple. I would recommend you can just memorize this one. Okay, now, okay, what you would, why you would review your business plan. Okay, okay, this we have already discussed in earlier slides. So anyone, yeah, please, why you would review for expanding business? That's correct, Sanjeev. Yes, anyone? To develop new strategy to enhance business. That's correct, Sakib. If we are not able to achieve the goals, then in terms of profit, correct? That's correct. Improving the performance. Yes, correct, correct. Yeah. Okay. All your answers are correct. Upgrading the business. That's correct, Naresh. Okay. I'll just give you my answer on this. Apologize for this annoying window. I'll try to put it up. Not sure why it's not going. Okay, anyway, um, uh, good practice to review corporate goals. Yeah, allocation of resources, measuring performances, new investments growth, and that's all for that question. Okay. How would you measure performance of your business? Okay. Okay. By KPI, that's correct, Vinod. Yeah. Profit growth. Benchmarking, that's correct, Saqib. Customer satisfaction, that's correct. Benchmark, yeah, okay. Good name in the market. Yes. Yeah. Okay. You guys have touched the base. I'll give you the suitable answer for this. Okay. Your financial statements, basically that will give a clear idea how your business is performing, whether it's making profit or loss. Okay, then the customer feedback survey, obviously that's one of the important things which we need to do to understand the client's feedback and their expectations. Okay, client retention, then new project wins, and will be the conduct SWOT. Okay, question number 6. What is SWOT analysis? These are also asked in the APCs. I think we all know the answer. I'll just quickly print it. Strength, weaknesses, opportunities, and trait. Okay. What is PESTEL analysis? It's again straightforward: political, economical, social, technical, legal, and environmental. Okay, that's all from my side, guys. I would welcome any questions you have. Okay, thank you, Maher. Thank you. Thank you. Can you clearly differentiate vision and mission? Okay. Basically, vision is when you are setting up a business, okay, or when you're setting at your own company, there is a vision, is what you want to achieve, okay, and a mission statement is basically tells about the fundamentals of your company, means why you exist, what you want to uh, put emphasis on what do you call, um, different elements, just like you wants to have a better customer relationship, or you want to have this one we just did, then we'll do right things, we'll have ethics in place, we'll have a CSR and all. Yeah. Okay. Okay, any questions, guys? We still have 2 minutes. Thank you. Thank you. Thank you. Thank you. Thank you. Are you? Thank you. Okay, the next sessions, we are in planning stage, and once it's finalized, we will be sending you the emails and invites. Yeah. Thank you. Okay. Uh, Apart from this, if you got any more questions after this session finishes, if you have any questions, you feel free to email. We'll try to answer. Okay. Okay. Thank you, Aniket. Thank you. Okay. Thank you, guys. I think we can conclude today's sessions. I hope you guys are really enjoyed it, and definitely, I believe this might help you in your APC process. Yeah. Okay. And we will try to come up with some more informative sessions in coming days, and we'll work with all of our guys. Okay, thank you. Thank you, guys. Thank you. I think it's time also. Just be safe in these difficult times, and I would like to say Happy New Year to you guys in advance, and hopefully we'll have some more sessions in the coming years. Thank you. Thank you, guys. Thank you.